Welcome, everybody. Welcome to TAKESTOCK Live, our weekly investor webinar series, presenting panel discussion Q&A. In next week's show, we have Conduit Investor Relations. Here we go, which is bringing us Chris Marcus of Arcadia Economics, Andrew O'Donnell of Supercharged Stocks, and is also bringing us presentations and discussion with North Star Gold and Clean Seed Capital. We would like to thank the TMX Group and TSX Venture Exchange, our event partner, for helping keep the conversation between companies and investors going in these very interesting times. We also recognize the vital support provided by our core sponsors, Baskin, MNP, Lee Jones Gable, Olympia Trust, Dealmaker, and the CSE, who helped launch the forum back in 2014. We'd also like to thank our extended network for their support in launching this new initiative. Thank you to Calgary Meg and CIM, to Sterling Merchant Capital, and many others. Thank you also to Kathy Hume and CHF Capital Markets for the three tech companies in this episode. CHF Capital is a Toronto-based investor relations firm which has been a trusted partner for many public companies operating in mining, technology, healthcare, oil and gas, and special situations in Canada and worldwide. I'll now turn the mic over to my colleague and moderator, Mark Francis. Take it away.
Thank you very much, Raj, and for working the wee hours from Delhi in order to make all of this happen. Welcome all of you, our attendees and guest presenters. Now, do note our disclaimer. This presentation is for information only and is not a solicitation to buy or sell stock. TAKESTOCK and its principals, Raj Joshi and I, may have equity investments in companies we invite to present, make no representation or investment or other recommendation in regards to these presenting or any other companies. You should do due diligence and seek professional investment advice. Some housekeeping matters. The chat board will not be utilized live in this session. You can still type and send messages, which will be followed up on by the respective companies post-session. So please be clear about to whom it is addressed. We will accept questions formally for consideration in advance of each session. Today, we have guests from three companies active in information technology. Each company will have 6 minutes to present using their PowerPoint, and then we will have a panel discussion with some Q&A. We encourage you to connect with the companies directly in order to get more detailed information. Contact details for the presenters can be found on our website, takestocklive.com. So today we're going to have with us Silas Garrison, CEO of HealthSpace Data, a technology and software expert who has provided his expertise to the likes of government, Wells Fargo, NASCAR. We have John Putters, CEO of Visionstate Corp, twice nominated for the Ernest C. Manning Award for Innovation in Canada. And for those of us joining us from outside of Alberta, that's quite an achievement. And Jay Hutton, founder and CEO of VSBLTY Group Technologies. Jay is 30 years a software and technology company guy, has started early with some companies that grew very big, has been the founder as well, and he is involved in artificial intelligence and machine learning. So without further ado, let's start with Silas Garrison. Silas, thank you.
Hey, thank you, Mark. I appreciate it. So as Mark mentioned, I'm the CEO of HealthSpace. HealthSpace is a government software as a service provider, or SaaS as it's more commonly known. So our platform is targeted towards government agencies on a state and local level or provincial level in Canada. Our customers are those agencies that regulate private businesses on a whole slew of matters, from restaurants to hotels, swimming pools, etc. And our solutions enable them to more efficiently do all of their workflow. In short, their workflow is, business fills out an application. That application goes through a review process within the government channels. They issue a license should they subsequently pass the muster, and then they are issued an invoice for which they have to pay for their permit and their licensing. And then the government performs inspections periodically on that business. All of that information, it's a lot of data, a lot of information, flows through our system to allow them to more efficiently perform their day-to-day duties. As we have started, HealthSpace has been around for about 20 years. I've been with the company just over 3 years now, but we serve over 500 government agencies all across the US and Canada. And some of our customers include the city of San Francisco, the state of Florida, and others. And our platform is a cloud enterprise SaaS solution with also mobile apps that handle the whole workflow from top to bottom for these government agencies in a self-serve fashion. And I'll touch more on that in a moment. As we continue to grow and expand, our horizons on the future are focused on fintech and payment solutions, as well as expanding into other government verticals that allow for greater market reach and higher revenue sources. So this is just a quick snapshot of our product suite. Again, that all centers around our HS Cloud product. HS Cloud is the enterprise cloud-based platform that handles all of the setup and the logic, the rules. As you know, government has a lot of rules and laws that they have to follow. Our platform allows them to set all of that up with just a few clicks, bypassing what is historically done in this space through lengthy, long deployment processes working with software developers. We allow them to do it themselves through just a very simple wizard and interface. Our Rhs Touch is our mobile application. It's really the entrance of where I came into HealthSpace. I developed the first iPad app in the government space for field inspectors. My health department is really the next entree in terms of product innovation we're pushing out there. That is what we kind of call the digital bridge between the private sector and government. Think of it as the digital replacement of a government office, where you as a private business or private citizen, everything on a regulatory level that would go into interacting with government, inspections, applications, paperwork, all of it is stored in a central portal that these businesses can interact with and access very easily. HS Pay, which is our most recent evolution of technology, is our fintech solution that will allow these private businesses who are required to pay fees to go online or using their mobile phone, be able to pay for their regulatory fees. So this is just a quick snapshot of some of our revenues and recent wins. Most of these wins have actually come in the past just 6 months. The city of San Francisco, we closed that in the month of January just this past year, so just a few short months ago. Not only is it a sizable dollar amount, but it's the beating heart of Silicon Valley. We beat out some of the largest competitors in the space when we went head to head with them on this bid. Not only does it set up a lot of future sales opportunities within the state of California, it gives us a stamp of approval and really sets our application apart in our product suite, HS Cloud, from the competitors as being the one that was chosen by kind of Silicon Valley and its central hub. We really have already seen this transform the kind of word of mouth spread and the demand for our product. This is just a brief snapshot of some of our customers as we serve 500 agencies, both large and small, all across the spectrum that we cover. This is just a quick look and at our pipeline. We started the year of 2020 at 3.2 million in recurring revenue. We project that by the end of the year, we'll be at 5.2 in ARR, or annual recurring revenue under contract. Our sales pipeline currently sits at over right at $15 million in multi-year opportunities before us in terms of government agencies that have expressed interest or are making plans to purchase our software. So our sales pipeline has grown precipitously with the launch of our new cloud platform. As I touched on earlier, our fintech solution, we went out and we've partnered with PayPal, and we're on the precipice of launching this new HS Pay solution, which will allow us, from a revenue standpoint, to collect 1% of every fee that flows through this payment platform. Within our current customer set, they collect just over $300 million a year US from private businesses through their licensing and regulatory fees. And we can stand this up within our current customer base, but as we continue to grow, the amount of available revenue that we can collect on behalf of government and generate a new segment of revenue for us is quite significant. So we believe this to be the really high next growth vertical. So as we continue to sell our SaaS products, whether it be a $500,000 sale or a $2 million sale, there's a second round of opportunity within that to launch our HS Pay and be able to generate a significant top line revenue. And that brings us up to today. We serving government, and we work with, I didn't really explicitly state this earlier, but we work with a lot of environmental health agencies. And environmental health being a subset of public health, they are frontline for addressing all of the concerns during this COVID-19 pandemic. So our contact.
Thank you very much. I'll give you one sentence. We've crossed the 6.5 minute mark.
All right. Thank you, Mark. We are deploying automated contact tracing solutions all across North America right now, most recently with the state of Hawaii. And this is a next entree for us to continue to excel our technology offerings.
Very good. Thank you very much, Silas. We'll hear from you later during the Q&A.
All right. Thanks, Mark.
And next up, we have John Putters with Visionstate. John, over to you.
Thank you, Mark. As mentioned, my name is John Putters. I'm CEO of Visionstate Corp, publicly traded company listed on the TSX Venture Exchange under the symbol VIS. The main operating division of the public company is Visionstate IoT Inc., which is focused on Internet of Things solutions for the facility management sector. Visionstate IoT's core product is called Wanda, an IoT device installed at restroom entrances and common areas to collect data on cleaning and maintenance activities. The device collects this information both through sensor input and frontline staff. Wanda was really created for two main reasons. First, to increase public perception around the facility's commitment to high cleaning standards, which after COVID-19 has become extremely important in order to satisfy customer expectations. Secondly, and equally important, it was developed to track cleaning activities through detailed reporting and analytics to improve operational efficiencies, as well as providing a digital audit trail to defend against liability claims, particularly slip and fall lawsuits. As a result of the COVID-19 pandemic, maintaining compliance to new stringent cleaning practices has taken on a new meaning. And this can now be measured both in terms of liability and in people's health. Currently, Wanda is the only product on the market that's actually focused on the cleaning compliance aspect of smart restroom technology. Wanda's been on the market for approximately 5 years, but only in the past year we've seen a dramatic rise in deployments and sales pipelines. This is partly due to the fact that IoT wasn't fully understood in the sector in which we operate, and how this technology could impact the bottom line with a strong positive return on investment. As you can see by the map, the company has deployed the solutions throughout North America and in some very key locations and market segments, including shopping centers, casinos, hospitals, airports, and recreational facilities, just to name a few. Again, as a result of COVID-19, suddenly our product, our solution is extremely relevant, and the sales pipeline has grown even more substantially, and very large recognizable companies will be implementing Wanda over the next few months. The company generates revenue based on upfront royalty fees on each Wanda sold, which is actually sold through a large global sales network, and earns residual income through license fees, which, by the way, we recently increased. Based on user experience, the company launched 2 new products over the past 6 months, including a very innovative IoT button, which we call Wanda Quick Touch, which is designed for quick deployment in remote areas for issuing cleaning alerts and tracking regularly scheduled cleanings. The company also launched a mobile app called Wanda Mobile, which tracks cleaning and maintenance outside restrooms and provides digital audit trails on these activities. I mention these products because both of those run on a software as a service model as well. Q3 2019 had a number of significant events, not the least of which was our first deployment to a Class A office tower in downtown Manhattan. The customer is a Fortune 500 company with global operations in real estate. This was combined with other U.S. sales, including a large U.S.-based power authority, several hospitals, and a recreational facility in the US as well. We recently launched new products, as I mentioned. One is a mobile app called Wanda Mobile. Currently, that's being deployed to a network of 55 warehouses across Canada. These warehouses are designated as essential services. And that rollout is already about halfway into it. So we're really happy to see that our mobile app is being accepted by the market. We've also made sales on our IoT buttons or Wanda Quick Touch, and those have already been deployed to hospitals in Vancouver. Moving forward, our intention is to continue to invest in our technology. We're currently working on agnostic sensors for any restroom dispenser to measure their performance and the supply levels, all of which feeds into Wanda as the hub. And we're also working on RFID asset tracking inside facilities. Our global partners, which include companies like Bunzl, Compass Global, Airmark, and Veritiv, are actively ramping up sales and marketing activities. Within the next few weeks, sales training webinars are going to be held with our network of resellers, also online advertising, print advertising, and direct marketing to existing clients. In the post-pandemic world, Wanda is extremely relevant and important to meeting new standards in cleaning compliance.
Thank you, John.
Thank you very much. Actually, I had one line. It was increasingly our product is becoming the standard and a small investment considering the potential outcomes that can be measured in liability and people's health. Thank you very much.
Very good, John. Thank you very much. And now, Jay Hutton. On with your turn.
Great. Thank you, Mark. And thank you, everybody, for attending after a long market day. I'm going to start a little bit really quickly here with the marketplace that we're after. We've got this unique VSBLTY as an artificial intelligence computer vision software company. The things that we're doing didn't exist 6 years ago. As we march towards more and more powerful computers, we're able to get the computers to do things that only human consciousness in the past was able to do. We apply this capability, which is a combination of artificial intelligence, computer vision, to 2 discrete but related marketplaces. We sit at the nexus of marketing and security. We apply our technology into retail for the purposes of retail's managing and identifying real-time footfall or traffic within their stores. We capture data for the purposes of retail optimization, things like the number of males, the number of females, the age ranges of the people in the store, the emotional sentiment of people in the store based upon where they are based upon where they are geographically in the store. So there's a huge opportunity for us to do more and more in this category. In the security side, we apply the computer vision, the ability to teach computers to collate, report, and deliver context on what they're seeing. That's a huge advantage in the security marketplace because we have this enormous problem, and that is we're proliferating the number of cameras and we're not enough operators. Next slide really quickly. I talk not often, but from time to time I speak about the team. The comment I make about the team is not just that the group is laser focused on these two marketplaces, but we've been around. We're sort of no newbies on the team. And that's important because what's atypical about a company like us at the stage of our development is the entire 3 or 4 years of the first years of development of this company, we funded ourselves. And I'm proud to say that more than 50% of the company is still owned by the insiders. And that's, I think, an important piece and a fairly atypical piece. So what do we actually do? We deploy 3 specific modules of technology, all of them in software, delivered under a software as a service model, to inform retailers what's happening in stores, engagement with messaging in store, like digital display in the upper left-hand corner there. We measure all of that. We do this by gender, by age, that sort of thing in real time. And we provide the retailer an outcome. We also provide something different. We provide the brand, a PepsiCo, a Unilever, the ability to manage in real time people's response to their messaging. If they're promoting a specific product, what they may wish to know is how people of various ages and genders are responding to their product. This really takes us into the internet world. The internet has been an attractive place for advertising, primarily because it provides feedback, it provides profiling, it provides measurement. And we didn't have that ability for years in physical spaces like bricks and mortar stores. Visibility, if you could take anything else away from this conversation about what visibility does, take away the fact that we bring measurement for advertising into physical spaces. And if we're able to do anything like what Google has done on the internet, I think we've got a good shot at this. On the second piece of the company's value proposition is the security piece. So in addition to measuring footfall, people at flow in retail, people movement through retail, we also look for bad guys. We are able to leverage existing camera infrastructure, existing closed circuit televisions to interpret what the video feed is. And what I stepped on a little bit earlier, which is really kind of important to highlight. We're all aware of this terrible tragedy that happened in Las Vegas when 58 people were killed at a country music festival. What a lot of people don't know about that event is the bad guy loaded weapons from his car to a bag 3 times within view of 4 different CCTV cameras. The hypothesis of visibility in the security category is let's use software, let's use middleware to inform the operator to that which he isn't seeing today. Because the problem is that those same operators monitoring those cameras, they had 1,600 cameras to monitor. So clearly 2 of them missed what was very relevant and germane information. Software doesn't miss, software doesn't take a coffee break. Software can run 1,600 cameras, 16,000 cameras. So we've got this enormous opportunity, and visibility is doing its best to move on that. The second thing on this slide really quickly is the fact that in addition to identifying persons of interest, persons enrolled in a database, bad persons, we can also find weapons in real time. We have the largest 500 entry classified weapons database, and we built that some time ago with Microsoft. What's important about this company is we sit astride these 2 marketplaces, both with compound annual growth rates beyond what I've seen in my entire career. We have the sort of embarrassment of addressing both marketplaces. 3 discrete components of product. Visibility Vision Capture is a content management solution. Visibility Data Capture is an anonymous and privacy compliant measurement solution. And Visibility Vector is a security solution for facial recognition and object recognition. We measure and generate revenue by device per month. And at the bottom of this slide, it's quite relevant. These were our minimum viable product. These are our first deployments. These are the people that we got our teeth wet with. Of course, in the first 3 years, and by the way, all of them paid money for it. We didn't do the giveaway thing. So these actually form the basis of what we then pivoted to, which is creating significant partners. We didn't want to build a lifestyle business. We didn't want to build a $30 or $50 million business. We could have done, and that would have been interesting, but it would have been a lifestyle business. What we wanted to do is build a $500 million company. We sit on top of these marketplaces that are exploding in terms of their size So the critical delivery for the company last year in 2019 is all these major partners. These are major multi-billion-dollar companies. Sensormatic, 185,000 customers, 105 countries. WestRock, largest packaging company in the USA. Seneca, News American Marketing is the largest in-store media company. UST Global, large Indian-based integrator, and Energetic, a large smart city deployment in Mexico City.
Thank you very much, Jay. Appreciate that. That's
Thank
good.
you.
Good. So we'll now get all three of our panelists on, our presenters. And we've got several questions for you. Thank you, gentlemen. So, you know, I think what a lot of people want to hear about, and not talking about revenues per se, that'll be the next question, but your internal operations may have been affected by this COVID-19 issue, but a lot of software companies have actually found increased profitability. So tell us a little bit about the impact on your operations and how you've adjusted and how your teams are coping with this internally. So why don't we start with you, Silas?
Sure. So working with these government agencies has been interesting. You know, what we were doing going into the pandemic is that, you know, business was kind of roaring, like we were seeing a lot of opportunities. And we saw that a lot of our customers were starting to get a little bit more distracted and pulled into the fray because they're front line for this. And so what that did is it actually gave us an opportunity to reach out to them to offer our assistance. And what that led to was several conversations, but inevitably wound up for us being able to actually automate contact tracing. That being the key central thesis that this is what's going to be what helps reopen economies and tracks the spread as people get out to normal life, or back to normal life, I should say. So our platform has actually introduced a new sales vertical that we didn't have prior, which is public health. Public health is a larger umbrella organization within government that has deeper pockets, has significant federal funding behind it. And so now we are directly working with these agencies and selling into them, all because of the COVID-19 situation.
Okay, good. John and Jay, if we can get you to talk how it's affected your internal team and how you've adjusted operationally internally. John,
go ahead.
Sure. Internally, it hasn't really affected us all that much. You know, we employ software programmers, and, you know, frankly, that lends to social distancing. We're finding that the collaboration is uninterrupted. But, you know, beyond internally, frankly, my phone has been ringing off the hook because our software is suddenly relevant. I think that frontline cleaning was taken for granted. I'll put this out to everybody. What's it going to take for somebody to go onto a cruise ship post-pandemic world? So, you know, we're really gearing up and focusing more and more on the compliance aspects, and we've spent literally the last 2 months developing new features around that.
Coming out of 2019, I guess the most significant piece of our business was that we began that inflection point. We did more bookings in the fourth quarter of 2019 than the previous 3 quarters combined. And going into 2020, we had our first seven-figure quarter. That's the external impact. Internally, because we're in the business of computer vision, we have noticed, like Silas, actually, we've opened up a brand new category of business. We identify things like social distancing, using camera technology to manage real-time capacity in a grocery store, using temperature sensing cameras, which is our bailiwick, to measure persons entering buildings to see what their wellness is. We didn't expect that, and honestly, it's having stresses on the organization, but in a really good way, as Mark just mentioned, as you just mentioned.
Yeah, well, good. So good, actually, for each of you, it's not been a problem. Technology companies are doing well in many cases during this time. So each of you provide, in a sense, software as a service, IT, on a subscription basis. And early in a growth phase, it can be hard to be sure of your actual operating margins. Can you shed any light on these in each of your cases? Why don't we start with you, John?
So we use a fairly vast network of resellers for our product. In fact, our main partner is a global logistics company based in London, England. And so it's fairly straightforward for us to identify and maintain good margins on our product. Particularly on the license fees and the residual amounts, and anything to do with software as a service, because really it's sort of a volume game, and the more product that we get out, the more revenue that we're going to generate. So luckily for us, our partners are in cleaning and hygiene, and frankly, their business has increased dramatically as well. And, so we're quite happy to be partnered with them and marketing this all over the world.
To us, there's an enormous difference between profitability and EBITDA. I have to say, as a software as a service company, we know we control our costs pretty aggressively. There was a time when we had a larger component of cost associated with delivering a single subscription. We've managed to grab a hold of that and move it down quite a bit. So I can confidently say that going forward, from a gross profit perspective, we sit in the 85%, 90% category, and probably most software as a service companies do. If we control our costs accurately and appropriately, as I think we can and will do, we'll put about 45 to 48% to the EBITDA. So we're happy about that, and I think it's fairly predictable at the moment.
That's good. Silas?
So for us, it's really charting towards high margin. Our platform being that it's kind of self-serve and it's very easy to configure on a very large scale basis. To give specifics to that, when we developed this contact tracing platform, we spent about a weekend with a couple of developers. We're able to punch out the additional features that were needed. And on top of that, we're able to turn around a new agency, a new government department within 24 hours. And that's usually just the turnaround time for us to turn it on and get back to them. Realistically, it takes us about 30 minutes to set it up. It's very, very fast. So long term, obviously we're in a growth mode. So as we hire ahead of the growth curve, today's margins look far different than long-term margins. And we have two sets of lines of revenue from which we derive that. And one is services. So it takes some effort to deploy someone like the city of San Francisco, because you have to get the requirements, you have to spend time on site with them often. But for that reason, they're paying us $650,000 in services up front. Now, we anticipate having about a 30% margin, kind of like a small consulting firm within the company. On our maintenance and our ARR, the year-over-year revenue we get for just basically letting the software run, we anticipate having high margins over time, upwards of 80%, which is pretty typical for large-scale SaaS deployments.
Very good. So let's expand this theme, because each of you are trying to stake out additional market share. Some of you have competitors. Some of you are in new, really fresh territory. Tell us about your cost of customer acquisition and either your historic or your projected customer stickiness. So Jay, why don't we start with you this time?
Yeah, that's a difficult one, because we don't really track customer acquisition. Our costs are associated with paying, unfortunately, a fairly high-priced sales force to get after the marketplaces that we target and address. And those would be sort of in random order: retail, security, a lot of venue work, a lot of, as sports teams go back to work, you need to have a unique glossary and a unique skill set to go after that marketplace. So that's our cost of goods. The good news with SaaS companies, and I'm sure all the guys will say this, is that once you turn the corner, once you land the contract, you basically don't have much in terms of cost to overcome, because as Silas mentioned, you allow them to continue to use the software over time. So I don't think we're all that concerned about cost of acquisition. It is what it is. It's probably, we spend between $400,000 and $500,000 per year acquiring customers. But that's a small price to pay if we're projecting the way we expect to be projecting, which is in the neighborhood of $10 million for 2020 revenue. I don't know that we would have to grow that. My guess would be that we'll be able to get to a fairly good clip without actually growing in real terms the number of salespeople that we have.
Silas.
Yeah, so our customer acquisition costs are fairly low. Within the government space, it's a lot of cold calling and a lot of online demonstrations. Prior to the pandemic, when travel was normal, there was some customer acquisition costs with flying around and visiting prospective customers. But even travel burn is not that expensive when done at scale. So really, our sales team is comprised of predominantly 3 people. And we've been able to handle an enormous amount of sales pipeline with just 3 heads. And right now, over the past few months, there's been no travel expenditures. So our cost of acquisition is very low and will remain as such over the long term.
John?
So we sell our product through resellers primarily. Our major partner is a company called Bunzl Cleaning and Hygiene, which is a multi-billion-dollar company based in London, but very strong in North America, particularly through acquisitions over the last couple of years. So I'd say our cost of customers acquisition is a portion of the revenue that we give to them to incentivize them to sell the product. Basically, that allows Visionstate the ability to focus on developing new technology. So it's a great partnership. We also have other resellers in the US that work on our behalf. And the product is actually distributed through Bunzl. So we don't have any inventory costs. It all comes out of the US, in fact, and is delivered directly to the customer.
That's all very good to hear. And in a linked question, of course, the capital markets, as we know, are in a bit of a crunch. It's particularly hard on small cap companies. We're in a situation where if you look at the value of trading on the small cap markets in Canada, it has shrunk quite considerably. If you take out the gold, the gold juniors. So do any of you feel that because working capital can be pretty critical for small cap tech companies, do you feel you need to go to the capital markets for additional juice, if you will, additional power? And if you do, what are you thinking? John, why don't we start with you?
Sure. Frankly, our stock price has done very well in the last couple months. I think once people realize that, this is a relevant technology that's going to be important in the ongoing fight against any virus, whether it's the COVID-19 or anything. So we're looking at possibly capitalizing on that to do an additional raise, possibly with an acquisition or an investment to, synergistically that will help the core company product in its market positioning. So it's something that we're actively considering based on the current market conditions for our company. But we haven't made any definitive decisions as yet.
So I'll go next, I guess. Of course, any company that is engaged in the kind of velocity that we are is looking for capital to continue to ensure that we have execution capital. I refer to it as execution capital, not working capital, because it's not about securing the customer for us at this moment. It's making sure that once you've secured the customer, that you execute perfectly. And we opened up financing a couple months ago, a convertible debenture. We're kind of 2/3 of the way through that now. We'll complete that, I think, without too much issue, and that'll be all we need, I think, to get us to the point where we've got a profitable and going concern. So again, that's just about de-risking the stuff we've already landed, not about securing brand new deals.
Right.
So for us, I actually like Jay's terminology of execution capital because, for us, we're on a high growth phase and we've got a lot of opportunity before us. And so it requires, shelling out a bit more money to ensure that you can execute on those sales and actually fulfill them. You need the people in-house to provide the customer support, et cetera. We just are in a position where, we completed a financing just last week, roughly. And so that was just over $2 million, an oversubscribed round. And what that puts us in a position to do is to be able to capitalize on all the opportunities before us without any sort of growing pains or cash flow constraints. So our position right now is very comfortable, and we're well poised to not only just execute on what we have before us, but to grow into even further opportunities such as the contact tracing opportunity.
Very good. We've come to the end, and I just want to say what a pleasure it is to have three really determined, competent tech people presenting their companies. You have all shown growth in the company. Of course, you've done it before, so you know what it takes, but determination and a very straightforward approach to your presentation. So as we move to the closing, let's give each of our guests 15 seconds for a final comment. Silas, let's start with you.
Sure. Well, thank you, Mark and Raj, for putting this on, and thank you for everyone who attended. What we're doing right now is we're really trying to revolutionize government. We kind of sometimes relate it to being the Salesforce for government. There's no ubiquitous cloud platform that's adoptable across a broad spectrum. And so what we aim to do is rapidly grow and revolutionize the government space as we know it.
Raj and I love hearing words like those. John.
I would say paper tracking on activities in restrooms is a thing of the past. It's a joke. We all know that it's a joke. Now it's going to be incumbent upon facilities to entice people to come back, to feel safe, and to protect themselves against potential lawsuits or even people's health. And we're really the only solution out there that can make that happen. So we're very excited about the future. The kind of companies that are coming to our doorstep now, even large casinos in Las Vegas, it's really exciting, frankly. And, I hate to say that it had to take this pandemic to make us relevant, but I think that's the case.
Okay.
And I don't think cleaning will be taken for granted the way it has been in the past.
Thanks, John. And Jay.
Well, I just want to comment. I've had the enormous privilege in my career to be early on a couple of fairly important technological revolutions. The first one was the internet. I just happened to be there at the time that it was growing up and being built, and I was working for a company that was building it at the time. So it had nothing to do with my talent or ability. It had a lot to do with just being at the right place at the right time. I have to tell you that what's happening right now with computer vision, both in retail and in security, feels like that. It feels like the same kind of velocity and the opportunity that lies in front of us. Now it's just about taking that marketplace, which is well articulated and well documented, and just executing well. So I think it's a great opportunity for us as an organization.
Good luck with that, Jay, and good luck to all three of you as you make forward progress. So thank you, Silas Garrison, HealthSpace Data. Thank you, John Putters, Visionstate Corp. Thank you, Jay Hutton, Visibility Group Technologies. And you are our attendees. Thank you for your time today. Do go to the company websites and CDAR and learn more about these companies, and check in at TakeStockLive.com. And until next Wednesday, 15 minutes after market close, when we will have a lineup of companies and speakers from Conduit Investor Relations, be determined in your due diligence and ask tough questions. Thank you.